What's going on, guys? We've got some recent Bitcoin news. Bitcoin's been breaking out to levels we haven't seen since last year. And the other day we had the largest inflow from the Spot Bitcoin ETFs since back during Bitcoin's peak in October. But first, let's look at Bitcoin's chart. We've been on a nice uptrend ever since we broke this descending trend we've been in since Bitcoin topped out in October. We've just been continually pushed down, finding this red resistance line as a resistance until we finally broke out of it. Broke over the 50 MA on the daily, came up to our recent highs here, got rejected, came down, found support at the 50 MA, and then broke out of this level. Now Bitcoin is only a few percent away from testing the 50 MA on the weekly. Here it is on the weekly candles. We are roughly a 4.5% move away from testing the 50 MA weekly. One thing that I haven't mentioned about previous cycles is typically this 50 MA test comes a bit later in crypto winter. For example, the one in the last cycle came in roughly March, or a few months later than we may be testing it here if we do continue up. In the cycle before it, the 2018 bear market, we tested it basically in July. Although in these last two cycles, the peak also came later in that prior year as well, whereas we topped out in October here. The last cycle topped out right around November. The cycle before that topped out in December. But we are getting ever closer to that 50 MA test on the weekly candles. All eyes are going to be on it, or all eyes should be on it. We're going to either break over it and probably see a pretty big reaction to that, or we're going to get rejected on it and retest some previous lows, possibly continue out our crypto winter, giving us fantastic prices to buy Bitcoin, the Bitcoin miners, and all the Bitcoin proxies. Now, as for the Spot Bitcoin ETF news, we saw the Spot Bitcoin ETFs pull in $750 million in inflows. The strongest day we've seen since October. $753.7 million worth of inflows was recorded yesterday on Tuesday. And rather than IBIT leading the inflows, which is typical, we saw Fidelity, FBTC, leading the inflows with a $351 million inflow just from that fund alone. Next came Bitwise's BitB and BlackRock's IBIT. And not only that, but we saw some pretty nice inflows coming to the Ethereum ETFs, $130 million in net inflows to the Ether-linked funds as well. This article cites improving macro signals, mentioning inflation cooling, but we kind of have some mixed results there, and I'll look at that in a second. And expectations that the Fed will continue to cut rates later this year, which is definitely expected. I think also a lot of it has to do with QE and the end to quantitative tightening. More liquidity brings assets higher. Now looking at CPI, this came out the other day, January 13. And this is December's reading, of course, that came out on January 13. The forecast was a 2.7. We received a 2.7, in line with expectations, still elevated from the Fed's 2% target. Now, when we look at PPI that came out today, the forecast was a 2.7%. Previous read was a 2.8. We received a 3%. This did not come down. It has been rising over recent months. All eyes are going to be on PCE. This is the Fed's preferred gauge of inflation. It comes out on January 22, and apparently will be the November read, not even December, because we're all screwed up because of the government shutdown. But the previous read there, which was for September, was a 2.8%. We don't have a forecast yet. We'll probably get it when we get closer to the actual event. But seeing this come in under previous month's read will be important for future rate cuts. And speaking of rate cuts, we have to go all the way to June of 2026 to see a higher likelihood of a cut than no cut. If you go to April, high likelihood of no cut. Go to March, high likelihood of no cut. Go to our next meeting here on the 28th of January, extremely high likelihood of no cut. A 95% chance of getting no cut, where we see a 5% chance of getting a cut. So keep an eye on what unemployment looks like. The job market is very important to the Fed, and if it continues to weaken, they might ignore CPI, PPI, PCE to save the job market, which we have been kind of seeing with cuts in the end of 2025. While CPI, PPI, and PCE were still somewhat elevated from their target, we were still getting cuts because unemployment was rising. So we'll have to keep an eye on the job data. Of course, keeping an eye on inflation data, CPI, PPI, PCE. Seeing these things come down definitely lays the groundwork for the Fed to cut. Keep an eye on PCE coming up. This will be before the Fed meeting. It'll be fresh on everyone's minds, probably more fresh than CPI and PPI that just recently came out, and still hovering in the high 2s to 3, which is not the Fed's target. The Fed's target is 2%. But how are you guys feeling about Bitcoin? Do you think we're going to get that 50 MA test soon? Do you think we're going to break over it? Of course, I'm talking about the 50 MA on the weekly. Luckily, we found support at the 50 MA on the daily. This will be a very important indicator to break over. As I showed you in the past 2 cycles, we found it as a resistance and we continued out our bear market. This will kind of tell us what to expect in the coming months. And I do think it's one of the most important indicators on the chart to look out for Bitcoin, seeing if we either find resistance on the 50 MA weekly or break over it. I do think we'll get a big reaction from the market either way. So keep an eye on that. We're about a 4.5% move away. We also have some interesting news from CleanSpark regarding their AI expansion. I'll be talking about that in a future video. I still want to read up on it, do a little research on that. I just saw that news as I was setting up this video. But thanks so much for watching, guys. I'll see you on a future video. Hopefully you have a good rest of your day. And here's to a good close today, seeing the market continue upwards, doing well in the new year. Thanks again, guys, and I'll see you next time.